Good morning, viewers. Welcome to today's episode. My name is Uncle Richie, and I continue from where we ended last week. Last week, we made mention of a lot as a beginner. If you really want to understand what I term as investment up close or the money market farming, then you have missed a lot. Kindly refer to our previous videos and catch up with us. This program is sponsored by West Trading, dealers in all kinds of electrical gadgets. At the same time, we are sponsored by Final Ride Production. They are also into video editing, radio advertisement, and so on and so forth. So whatever you need regarding your photography, visit Final Ride for your order. Today, we are continuing our lesson on categories of investment. One, we have ownership investment. The second one is lending investment and cash equivalent. When we talk about ownership investment, as the name clearly suggests, are assets that are purchased and owned by the investor. Example of this kind of investment includes stocks, real estate, among others. Finding a business is also a kind of ownership investment. The second one is lending investment. When you invest in lending instruments, you are essentially behaving like the bank. Corporate bonds, government bonds, and even savings accounts are all examples of lending investment. The money you park in a savings account are basically a loan that you give to the bank. The money is used by the bank to fund the loans it gives to its customers. When we talk about cash equivalent, these are investments that are highly liquid and can be easily be converted into cash. Money market instruments, for instance, are examples of cash equivalent. Cash equivalent generally offers low returns, but respondingly, the risks associated with them are also negligible. Somebody will ask, why should I invest? You may be wondering why you give so much importance to the question, what is investment? When you can work towards saving more from your earnings instead. Taking a portion of your income and saving each month will only create a reserve fund, which may prove to be inadequate in covering your family against medical emergency. On the other hand, now that you know what investment is, you will understand that investing your money leads to wealth generation and keeps you in achieving your life goals. There are so many benefits of investing. Some individuals or corporate entities will give you several, but we have listed very few for the purpose of this study. When we talk, somebody will ask, then what are the benefits of investment? One of the key things I want to talk about it is, one, wealth creation. The second one is enjoy better retirement, sustainable financial protection, death risk cover, and flexibility. Some people waste so many years in their life thinking over what investment is and how it is beneficial. They hesitate to consider investment meanings for wealth creation because of the involvement of risk. However, many investments are also risk-free, and some carry little to medium risk. When you are young, first understand fully about what investment is and its role, and then start. At an early age, you have few responsibilities and have a better tendency to experiment with different investment and leverage those which suit your requirement best. Investing early is also better because of the compounding benefits on investment to help grow your money. With more years ahead, you can reap maximum benefits on your investment, providing you first understanding and evaluate different aspects of what investment is, and then start early. Now that you know what an investment is and how it can help you create wealth, the next thing is also to understand how to invest. Here are a few vital points you must keep in mind before you decide to invest. One of the key things is analyze your financial needs. The second thing is time period. And the third is investment diversification. Let's take it and try and then break it down. Analyze your financial needs. Firstly, analyze your financial situation concerning risk tolerance, investment objectives, and other factors like family size, number of earnings members, and life goals. You may even take help from a financial professional. It will help you clarify any doubt about what investment is and what options are suitable for you. Time period. Know what time you have before turning your cash into investment. Depending on the requirement, you may choose short-term or long-term funds. There are products to take care of that. If you want to consider stocks, as we mentioned in the category, then you know the type of investment you are talking about. If it's money market, with time, we will be breaking them down for you to get it. Money market have medium to short term. Stocks have long term, depending on how the stock market will behave. So we will clarify as time goes on. Investment diversification. Build a diversified financial portfolio by putting your funds in different investments for maintaining the right balance between risk and returns. So many investors hear of products and they invest in without getting the basic understanding, thereby investing wrongly. Like I mentioned, stocks and other money market instruments. So when we say diversify, you can also have series of investment plan, like the short term, the medium term, or the long term. We will go into detail when it talks about diversification in investment, which is very crucial. Types of investment. Like I mentioned, we have stocks, we have bonds, we have mutual funds. Stocks include shares of ownership of any company and helps you earn dividends in return. In our previous episode, we explained what dividends are, what returns on investment are, what principal is. Those are the terminologies most investors or professionals use. So when we talk about stocks, we mean it includes the ownership of any company and help you earn dividends in return. Note, no guarantee that the stockholder will make money. If you invest in stocks, it is by giving your money to the company to work. So if you work with company A, you can give your money to a company B who has been listed on the stock market through their IPO, that's the initial public offer. With time, we are going to take the products one after the other, and we shall go into details. So when you give your money to company B, even though you are working with company A, you are a shareholder in company B because your money is working in there for you. Bonds. Bonds means lending your money to an institution or government. for which you receive fixed interest at regular interval, and also the face value upon maturity. When you invest in bonds, it's thereby giving your money to an institution or a government agency. What they do is that they give you annual dividends. At the end of the period, if the bond was floated for 5 years or 3 years minimum, at the end of the period, your principal is given to you with the assurance of receiving annual dividends. We have mutual funds. Mutual funds are collected from different investors and put in the company's bond or shares, which are managed by a fund manager. Upon understanding what investment is, you may choose equity funds or debit funds, depending on your risk capacity. When investing, consider that your funds or the company, one, past performance. Before you want to go into bonds or shares, consider the institution, their past performance, the companies that they invest in, how they manage their company, and the fee charge. Investment comes with cost. Some will charge you commission, others will charge you on your dividends. So please consider those investments and know which one you are buying for. We have the commodity market. We have the gold, we have oil, we have the grains. Those are areas you can also invest your money on the commodity market. We have the physical assets, like the real estate, lands, and so on and so forth. Those are the various types of investment we have. So we made mention of stocks, we made mention of bonds, we have the commodities as well as the physical assets. Talk of the real estate and lands. What are the objectives of investment? One, why do we invest? Those are the objectives, the rationale behind investment. And one of the key things is that to keep your money safe. Another thing is to help the money grow. We have to earn a steady stream of interest or income. Let's take it one after the other and try and explain. To keep your money safe. Capital preservation is one of the primary reasons people invest their money. Some investment help keep hard-earned money safe from being eroded with time. By keeping your funds in these instruments or schemes, you can ensure that you keep outlive with savings, fixed deposit, government bonds, and even ordinary savings account can help keep your money safe. Although the return on investment may be lower here, the objective of capital preservation is easily met. The reason is that keep your money safe. One of the key things you should consider by investing is to how to keep your money safe. We shall end today's lesson here. God willing, next week, Monday, at 7 a.m. prompt, we shall bring you the third episode on the objectives of investment. Please, if you haven't subscribed, please do so. Subscribe to our channel. We are going to learn a lot. This program is still sponsored by West Trading, dealers in all kinds of electrical gadgets, and Final Ride Production. Please visit Final Ride for your, in terms of your video, audio, radio advertisement, photography, for them to give you exceptional service. We shall end here and see you, God willing, Monday. Thank you.